Hey everyone, welcome back to the channel. Today, we're tackling a hot topic: Forex versus stocks. Which one is better in 2025? If you're new here, hit that subscribe button for more trading tips. Let's dive right in. First off, what's the difference? Forex, or foreign exchange, is all about trading currencies like the US dollar against the euro. It's a massive, global market that runs 24/7. Stocks, on the other hand, mean buying shares in companies, like owning a piece of Apple or Tesla, and they're traded on exchanges with set hours. Now, let's talk pros. Forex offers incredible liquidity. You can enter and exit trades quickly, and it has high leverage, meaning you can control larger positions with less money. Plus, it's always open, perfect for night owls. Stocks, though, give you potential dividends and the thrill of being part of a company's growth. In 2025, with AI-driven tools, stocks might offer more stable long-term gains through automated investing. But hold on, there are cons too. Forex is notoriously volatile, with prices swinging wildly based on global events, which can lead to big losses if you're not careful. Stocks can be affected by company-specific news, like earnings reports, and they're more influenced by economic cycles. In 2025, regulatory changes might make stocks safer, but Forex could still be riskier due to its decentralized nature. So, which is better? It really depends on you. If you love fast-paced action and don't mind high risk, Forex might be your jam. For those seeking steady growth and less stress, stocks could be the way to go. Remember, in 2025, technology like blockchain and AI will enhance both, but always consider your risk tolerance and do your research. Thanks for watching. If you found this helpful, like and comment below. Forex or stocks, what's your pick? See you in the next video.